What's up guys, welcome back to the channel. In today's video, I'm going to teach you a scalping strategy. This strategy is based on the combination of smart money concepts and RSI divergence. Trading with smart money concepts don't necessarily need indicators, but people actually asked for indicators they can combine with smart money concepts, and that is what I want to show you in today's video. You can use the RSI divergence as a confluence to smart money concepts. RSI divergence was one of my trading strategy during my early days in trading. When I first started trading, RSI divergence was the very first strategy I used, and it was a very good strategy for me. It was a very good strategy because I could remember there was a particular day I took 5 different trades on the same day and I won all. I still have the screenshot if I search for it. It's been a very long time. So it was one of my favorite strategy before I moved on to trading support and resistance, and now I'm using smart money concept. So there is always room for improvement. So I'm going to bring back that strategy right now. A lot of people still use divergence and they make money using the particular strategy. So I'm going to teach you how you can combine RSI divergence and smart money concepts to make money from the financial markets. So if you're interested in learning strategies like this, consider subscribing to the channel, drop a like on the video, and you can actually comment on the video. Okay, so let's jump straight into it. Now, before I start explaining, I know you have the general understanding of how to trade with smart money concepts. You know, trading with smart money concepts, you need to understand how to read market structure. You need to understand how to identify valid order blocks. You need to understand how to map out your change of character and liquidity and inducement traps. Okay, you need to understand all those concepts, and if you don't know how to do this, I will link them in the description so you will check it after now. So what I'm going to focus is explaining what is RSI divergence and how you can actually use RSI divergence. Okay, now RSI simply means relative strength index. This indicator, we usually use it to identify divergence. The indicator can serve many purposes, but what I'm basically going to do in today's video is to teach you how you can use the indicator to identify divergence. Okay, that's what I'm going to show you in today's video. Now, what is divergence? Divergence simply means when two things that has been moving in the same direction suddenly stops moving in the same direction. So let me explain it with this diagram on your screen right now. So from what you can see here, this is a bullish divergence. When we see a bullish divergence, we're going to look to buy. Okay, we'll be looking for our longs. From what you can see here, price pushed to the downside and RSI pushed to the downside, forming a low, and we see this pullback. RSI equally pulled back and price pushed to the downside once more. The RSI pushed to the downside. So they are doing the same thing. You see, price and the RSI divergence, they were doing the same thing, and you see price pushed to the upside, forming a lower high, pushed to the upside again, forming a lower high. Over here we see a push to the downside, that is the RSI pushing to the downside, and price was basically doing the same thing. And over here, what else do we see? We see price pushed to the upside, RSI pushed to the upside, forming a lower high. And over here, what can we see? Price pushed to the downside, breaking structure. So if I should straight this line right now, you can see that we have a break of structure right here. Okay, you see price pushed to the downside, forming a break of structure. But what do you see the RSI do? The RSI couldn't form a break of structure. Price formed a lower low, but RSI itself failed to form a lower low. So this is what we call a divergence. Okay, this is what we call a bullish divergence. When this thing occurs, it means that price is going to push to the upside. So this is a bullish divergence. And this is the second example right here, where we see price push to the downside, form a lower low, form a lower high, a lower low, a lower high, and a lower low right here. And the RSI itself did the same thing, form a low, form a lower high, form a lower low, a lower high, and we see a lower low right here. Now, what can we actually see? At this point, you see price form a low, push to the upside, form a high, and price fails to form another low. But if you look at the RSI, you can see price forms a low, forms a high, and now it breaks to the downside, forming another lower low. So if you try to look at what price did here, if you try to straight this, you can see that price failed to form a lower low, but the RSI formed a lower low. So when you see something like this, you should map it out like this. This is what we call a bullish divergence. Okay, it's a bullish divergence because we're going to look to buy from this area. So this is simply what a divergence is. So just pay attention. Let me explain divergence. After this, we will now combine it with smart money concepts, and you see how you can trade and make money with this in the financial markets. This is a very simple strategy. Just pay attention to it. and you will understand how to use it perfectly. So this one right here is for a bearish divergence, okay? A bearish divergence, just the flip of what I explained right here. So let me do it quickly. Let's move to the price charts. Let me explain quickly. So what you can see here is we have a push to the upside, a pullback, and a push to the upside. The RSI did the same thing. It forms a higher high, a higher low, and a higher high. Okay, price push to the downside, a higher low, and forms a higher high. The RSI did the same thing, a higher low. Here it forms a higher high. So at this particular point, what can we actually see? You see price breaks structure to the upside. Okay, price breaks structure to the upside, forming a higher high, but the RSI failed to break structure to the upside. Instead, what do we see? You see it couldn't form another high right here. So when you see something like this means that there is a divergence right here. They are failing to do the same thing at this point. So this is a divergence. And what I want you to note is this: there might be a situation where we might actually see something like this. Maybe the RSI might give something like an equal highs like this, failing to form another high. As long as the RSI fail to form another high, this is a divergence. Even if we have equal highs like this, okay, it's still a divergence. So that's the same thing from here. You see price, they were doing the same thing, forming higher highs and higher lows, and at this point, what do we see? Price forms a high and failed to form another higher high. But from the RSI, you can see price forms a high and waits on to form another higher high. So when you spot things like this, it means that there is a divergence and we could see a possible reversal, because when you see divergence, it means that price might actually reverse from that point. Okay, you might see a reversal from that particular point. So this is what you need to understand, and I hope you understand what a divergence means right now. So we'll be moving to the price chart. Let me show you how you can actually trade with this strategy. Now, trading with this strategy, we need some rules. Okay, we have few rules we use to trade for this strategy. We use for this particular scalping strategy, and what are the rules? So let me type it out. So talking about the time frame we'll be using, we're going to be using two different time frames. We're going to need the 15 minutes time frame. We're going to use the 15 minutes time frame to identify structure, map out our order block and inducement areas. We're going to use the 15 minutes time frame to do that. POI means you can actually map out your supply and demand zones or your order blocks. We're going to need the 3 minutes time frame for our entry. Okay, 3 minutes time frame for entry. So what we're basically going to use this RSI for is for our entry. You either identify the RSI divergence and use it as an entry, or you can wait for normal chalk, which is the change of character. You identify that as your entry. Okay, this is basically what we're going to need for this example. So these are the rules, and I hope you understand the rules. The time frames we're going to use is the 15 minutes time frame, and we use the 15 minutes time frame to identify the market structure, identify liquidity areas, and identify our point of interest which we'll be looking to trade from. Now the 3 minutes time frame is for our entry, and the entry means we're going to be using the RSI as our entry confirmation. And if price actually give you our normal smart money trading confirmation, which is the change of character, okay, which is the change of character we usually see. If you see the change of character and price comes to mitigate a fair value gap or your POI, it's still a valid one. So one thing you should note is this: if price gives you an RSI divergence as your entry confirmation, you're going to look to go for a quick 1:2 or a quick 1:3 trade. Don't take more than that. Okay, go for 1:2 or 1:3. But if price gives you a combination of an RSI divergence entry and equally gives you a normal smart money entry type, here we see a market structure shift and an entry from a fair value gap or another block, you can look to target the 15 minutes high or low. That's the 15 minute structure high or low. You can target that, or you can look to manage your trades in any way. But as long as you entering with RSI divergence entry confirmation, that means you'll be going for a quick 1:2 or 1:3. Okay, this is what I want you to note right now. So let's move to the price chart. Let me show you examples of how you can actually use this. So this is GBP card. This is the 15 minutes time frame. Like I said, we're going to use the 15 minutes time frame to identify structure, liquidity zones, and our points of interest. Okay, and you can actually include fair value gap. I forgot about that. What we're going to do is we're going to put our RSI. So what you do is you go to indicators and type in RSI. So when you type in RSI, you're going to see the relative strength index. That's the indicator. What you do is you click on the indicator and it's going to be activated right here, and you can see it over here that this is the indicator. So let me zoom in the indicator so you see it well. So this is the indicator right here, the RSI indicator, and if you go to the settings, you're gonna see what we have here, and I don't think you should change anything over here. Don't change anything. So what we can actually see is when price is at overbought, we're gonna see something green, just like here. You see over here, this is overbought and we're getting a green color there, and when price is at oversold, we might see something red over there. So we're not changing anything. So this is the indicator over here. So this is price at overbought, and we know that when price is at overbought, price usually reverse from that area. So when price is at overbought and you see this green stuff, it means that we might actually get a reversal from there. And now price is at oversold right here, showing the red color over here. It means that price is going to reverse to the upside. So you're not here to trade overbought or oversold, man. That's not what you're here to trade. This indicator can serve many purposes, but what I want to show you in today's video is how to use it as a divergence, combining it with price. So let's jump straight into it. Back to the charts. So we're gonna remove the indicator for now and focus on what we see on the price charts. So from what we can actually see from the price charts, this is GBP card. Like I said, price has been in an uptrend. So we're going to read the price action. After reading the price action, when it gets to entry confirmation, we're going to involve our RSI and look to trade with it, okay, and we look to use it as an entry confirmation. So what you can actually see over here is that price has been in an uptrend, and over here we see price break structure to the upside. You see, this is a very clean break of structure to the upside over here, so we can go ahead label that as our break of structure, okay. And after that, what can we actually see? We see price push to the downside, couldn't form a high, and now we see a change of character, and this is a very clean change of character over here. You can go ahead, identify this as your change of character, okay. This is your change of character over here. And now what are you going to do? What you're going to do is you're going to map out your point of interest, which you'll be looking to trade from. Now looking at this area, where could be your points of interest, a lot of people might be looking to identify this area as their point of interest, but from what you can see here, we don't have any inefficiency right there. There is no fair value gap at that area. Price was efficient at this particular area before it's pushed to the downside, but if you look right here, we have this inefficiency right here, and price usually come back to areas of inefficiency, okay. Where we have an imbalance, price usually comes back to those areas to fill in the imbalance. So we're going to come here, map out this as our points of interest. You can look to use this week as your point of interest, this week right here, or you can actually look to include the whole of this candle, okay. This is your actual zone, okay. This candle right here, this is your actual zone, but when we talk about zone refinements, you want to refine your zone, you can look to consider this particular area right here, okay. So now we have our zone mapped out. We have this change of character, that is structure. We have the fair value gap over here, where could be a liquidity zone. This area, we have something that looks like equal highs over there, so this could be a liquidity area. And if you want to map out an inducement area the way I do, this could be my inducement area. I can look to call here an inducement area, and they basically means almost the same thing. So the most important thing over here is that price sweeps the liquidity, sweeps the inducement, and now price is at our point of interest. Now what we're going to look is for our entry confirmation, okay. We're going to look to get our entry confirmation at this area, because when price returns back to your zone, what I said is you're going to use the RSI as your entry confirmation. Now we'll be going down to the 3 minutes time frame, like I said, for our entry confirmation. And now this is the 3 minute time frame. Let me zoom in a little more so you see what we have here. So from what we can see here, you see price has been breaking structures to the upside. Now if you want to use the normal smart money entry confirmation, what you see is that we have a low right here, we have a high, and this was where we got a change of character. This was where we got a good change of character. And if you were actually waiting for price to come back and mitigate this point of interest over here, maybe this zone over here, you want to wait for price to come back and mitigate that zone, you will see that you actually missed this trade and you would have not gotten involved in this trade. So this is why I want to show you this RSI indicator, which you can actually use as another entry confirmation in case you do miss trades like this, okay. So let me show you right now. If you try to use normal smart money entry confirmation, you would have missed this trade. So let's bring our RSI right now and see if we can get a divergence and enter a trade from there. Okay, let me take out this red box so you see the price action clearly. So what we can clearly see is that price forms a low. Okay, you see that price forms a low right here, and you can actually see that low over here. Okay, price forms the same low at your RSI indicator. Price forms the low, push to the upside, you see this high being formed, and now price push to the upside over here, and we see the high being formed equally. Now price pushed to the downside, forming another low. Okay, and the RSI pushed to the downside, forming another low. Now look over here, price pushed to the upside, forming a high. What can you actually see? The RSI failed to print a high over here. I hope you can clearly see what is happening over there. You can clearly see that the RSI failed to form a high. So let me change the settings of this so you can actually see what I'm showing you. So where is it? Okay, I have to use something bolder. Is this too bold? Not too bold. Dotted. Okay, now I have to use black. Or is it too bold? Okay, this is better now. So I hope you can see it over here. So this is the high I was showing you. Price forms the high, and this is the low over here. Now you see price itself forms a higher high. You can see it over here. Price forms a higher high, and the RSI failed to form its own high. So what you're gonna do is that you're gonna come over here, you're gonna map this out as divergence. Okay, you see it, price forms a divergence over here, and you can actually map this out as the divergence. Okay, you see that this is clearly divergent because price forms this high and the indicator fails to form another high. Instead, you see the indicator forming this right here. So what you're going to do is you're going to enter your trades over there. You enter your short position at this low right here. Where is your stop loss going to be placed? You placed your stop loss above the zone, few pips above the zone. And what did I say? You should go for a quick 1:2 or 1:3. And if you go for 1:3, where is our target? This low right here is our target, and this is a very good place to actually target because this is the next place price might actually react a little bit from. Okay, so this is a very good place to target. Okay, and that is what I've been trying to explain. This is a simple strategy which you can look to use, and if you didn't want to use this particular divergence right here, this one that is obvious, so let me show you. If I try to zoom in, let me zoom in the price so you can see what I'm trying to show you. So if you look right here, you can see that price formed a high using this wick, and if you look at the RSI, price equally form a high, and over here price used this wick formed another higher high, and from this wick you can see here the RSI failed to form another higher high. So you can actually come here and map this out as a divergence. Okay, because price was forming a high and the RSI was doing opposite of what price was doing. So you can actually come back here and map this out as your divergence. This is very simple and easy to identify. So when you map out this divergence, you can go ahead, enter your trades and go for your quick 1:2 or 1:3. But from what you can actually see here, price continues to move to the downside and it breaks this 15-minute structure. Okay, but since the RSI is what gave you the entry confirmation and not the smart money confirmation, you can look to take a quick 1:2 or 1:3. But remember what I said, if price gives you a smart money confirmation, okay, you can look to target this 15-minute structure, and this is a very simple strategy. So let me show you the second example before I end this video. And here is the second example we'll be using in today's video. Okay, so this is the second example, and this is Euro card, the 15-minute time frame. Remember, we'll be using the 15-minute time frame for this particular strategy. So from what you can see over here, we got something like a change of character over here. Let's say we have a market structure shift right here, because what you can see is that we have a break of structure to the downside right here, and price retraced to the downside to mitigate a zone over here. After price mitigates the zone, we see a continuation to the upside, that break structure over here. We see price moving to the upside, and we have a valid break of structure right here. So I'm going to zoom in this area because this is the area we'll be looking to trade from. Okay, so now that we have a break of structure, where will you be looking to trade from? You see the price action over here is not too clean, so we can say that this is liquidity area. Okay, I can map this out as a liquidity area, and from here we have this long wick and there is no inefficiency right here, so I can go ahead and map here out as my inducement area. So this is an inducement area, and where will I be looking to trade from? If I zoom in a little more, you can see that we have a liquidity sweep right here. We have this liquidity sweep. The candles that swept this liquidity, I can call them my valid order block. So this series of candles that swept the liquidity, I can call them my order block, but for the purpose of this video, I'm going to refine my order block to this single candle over here. I'm going to refine the order block. Now, if you're confused about how I'm analyzing the markets, I've been teaching how to do all these stuffs in this channel. You can look to check them out after now. If you've been watching me on this channel, you should know how I analyze the markets and understand how to read the price action very correctly and easily, because this is what I teach on this channel. You have everything mapped out, and you see price returned to this order block after it sweeps this liquidity area. If I try to extend it, you see this is a valid liquidity area. Price sweeps it, sweeps this inducement area, and now we see price tapping into our point of interest. So now what I'm going to do is I'm going to map this area out, and we're going to look for entry using the Rsi divergence that I talked about. So this is the 3 minutes time frame, our entry time frame. Like I said, the 3 minutes time frame is our entry time frame. So what we're going to do is that we're going to use our Rsi indicator to look for the divergence I just taught you how to identify. Okay, we're going to use the Rsi indicator to look for divergence, and let's do that straight away. So from what you can actually see right here, let me zoom in so we can see the price action very clearly. So from what you can actually see from here, what you can see is that at this point, at this particular point over here, we see price forms a low. We see price forms a low, but before that, what you can actually see over here is that from this area right here, this area, you see price forms this low. You see price forms this low, and you see the Rsi itself form its own low, and over here we see price forms another low over here, and the Rsi failed to form this particular low. So you can identify this as a divergence. Okay, this is a divergence because if you try to map it out, it's a divergence. And what you can see is that from that area, price moved few pips before a continuation to the downside. Okay, you see that price moved few pips, and if you try to measure that, you can clearly see that price moved about 18 pips, 18 to 19 pips. Price moved about 18 to 19 pips before the continuation to the downside. We're not trading blindly, we're combining it with smart money concepts, and we are trading from a point of interest. So trading it this way is going to make it be a little stronger, and it's going to be a perfect entry and a perfect trade, because you're not trading only the Rsi divergence, you're combining it with smart money concept, and it's going to be a little bit stronger. Okay, it's going to be a little bit stronger. As continuing, what you can actually see is that at this point, price tapped into our zone, and if you try to see, you can see at this area price formed this low, and this is the low over here. This is the particular low right here, and after the low, price itself continues push the downside, the break of structure, and it prints another low right here. And what you can see is that the indicator, the Rsi indicator, failed to print another low right here, and you can go ahead and map this out as a divergence. Okay, this is a divergence right here. This is a divergence, a clean one. Price has formed a divergence, and this is a very good entry confirmation style which you can use to encode into your trading style. You see, this is a very good divergence, and what you can do is you can enter your trade over here, stop loss below the zone. But if you try to look the smart money way, what you can see is that we have this change of character right here. This is a change of character, and if you're looking to trade from this order block right here, you missed the trade. But if you're looking to enter from this fair value gap, you can see you got a perfect entry. So since price actually gave us smart money entry type right here, let me delete this red box because we got what we want to see. Since price gave us both smart money concept entry type, and we equally have a divergence over here. Remember, since you're trading divergence, you already have your entry, and price was already moving to the upside. You already have your entry, your stop loss below here. Now that price has also given a smart money entry type, what you can actually do is you can either go for a quick 1:3 trade, and if you want to go for a quick 1:3 trade, this area right here is a perfect area you can look to target. And if you want to look to target the swing high, that is this particular high right here, because smart money gave us, we got a perfect entry using smart money concept. You see this area right here could equally be another high which you can actually target, and this is a very good trading style. Okay, this is a very good trading style if you want to spend your time to learn and backtest this. So this is what I want to teach you in today's video, and I hope you understand exactly what I taught you in today's video. So what I want you to do right now is go back to your price chart and backtest this. I always say this: don't trade anything blindly. Just like what I explained in the last video I uploaded, where I talked about 3 lessons that is going to change you as a trader. I told you, whatever you watch here on the internet or here on YouTube, don't jump straight into using it. Don't use anything except you've backtested and tested it yourself. I've done my own part by backtesting, and I've been testing this since last year. The divergence strategy itself, I've been using this divergence itself, but combining it with smart money concepts, I've been testing it since last year. Okay, so and here I am teaching you how to use it. So I've done my own parts. You're going to do your own parts by going back to the price chart, backtest it, and see if what I taught you actually works. Okay, you're going to backtest it yourself and see if it actually works. So that's it, and that is your parts, and you have to play your part if you want to succeed in the financial market. So I hope you understand exactly what I just teach you in today's video. If you are new to this channel, consider subscribing to the channel, drop a like, and equally drop a comment on this video. Thanks very much for giving me your time, and see you in the next video.